If you look at the data, there's virtually no purchasing power left in the fiat money, in any of the currencies, right? So officially, you know, in the US, you can go to the Fed, and so anybody can go on there and see, because everybody's looks the same, okay? Or extraordinarily similar. So if you go into the FRED, the Fred, which is the Federal Reserve Education Department, and in that little search bar, you put in purchasing power of the consumer dollar, purchasing power of the consumer dollar. What you're going to see is that officially we have roughly 3 cents left out of that original dollar's worth of purchasing power.
Yeah.
So there's no purchasing power left. They have to attack principle, which is what the negative interest rate experiment was about. And it didn't generate any more stimulation of the economy than just dropping the interest rates to zero. So the problem is they're out of tools. There's no more purchasing power to inflate away, and they're having trouble. I know globally they're trying to raise interest rates right now. That's so they can lower them again.
Wow.
So they're out of tools. So we're at the end of this currency life cycle. I mean, how many times do you see that reference back to 1980, 1982, 1971, 1933, blah, 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 right? Well, what was happening during those periods of time is that we were transitioning. We shifted from one monetary regime to a new monetary regime. That's what was happening. And so even though they reference to it, I just found an article, and I actually used it today. It was the Financial Times. Actually, not only did they say the last time they saw central banks buying this much gold was 1967, but they also referenced the fact that it was a monetary regime shift. That's the first newspaper article that I have read that they actually made that point. Because they'll tell you that, but they don't want you to understand that we are completely changing. And of course, this next piece, the digital, right? So we had a gold standard, then we had a paper standard. Now they want to take us to a digital standard. And then that digital standard, what they're actually doing is redefining money, because money is supposed to have this is the way it was sold to us. This is the way it was on the gold standard. It had 4 components. It was a tool of measure, a tool of barter, a short-term store of value, so you're fairly paid for your labor, and a long-term store of value so that no matter when you use that money, you are always fairly paid for your labor. Well, they took the third one out. I don't know when they changed this, but I was doing a piece back in October. And so I was doing some research on it. And I'm like, wait, when did they only make 3 pillars of money? I mean, it's more honest because inflation has robbed you of all that purchasing power. But I can't tell you because they scrubbed all their documentation, which I also thought was pretty interesting. Yeah, really. What gold has done for 6,000 years is hold your purchasing power value intact over time. That is the single most important function that it performs. And the reason why it does that is because it is the asset. Well, gold, physical gold and silver are monetary assets that have the broadest base of functionality and the broadest base of buyer. In other words, both gold and silver are used in every single sector of the global economy. So manufacturing, financial, art, food, medical, space, electronics, on and on and on and on and on. It's used everywhere, which means you have the broadest base of demand because you've got a whole bunch of industries that use physical gold and silver. So that's why it's never gone to zero. Now, tell me tell me any other asset or any other asset class that can be used in every single sector. You got to keep things as close to what people are used to as possible. And the reason why gold and silver is because they want to stay in power and in control. And if you don't have this to hold your purchasing power, what do you got? They can go in and they can just take you to negative rates. There's no value in this $100 bill. Fiat money is government declared money. This is legal tender. You have to use it.
Yeah.
But if they can declare this money in even digital form, can they not declare it not money anymore? And, you know, and this is really by design, because there was a piece that the IMF put out and anybody can access it. It's called Breaking Below the Lower Zero Bound. And it came out, I'm pretty sure, in 2015, where they actually showed you how they could eliminate cash. And what they stated in there, and this is their policy anyway, is they want enough distance between their policy and you as possible, so that you don't know that this is their policy. So in that document, they say that we want the retailers to introduce this. Now, what they talked about in that paper was, and so this lies in our future, I'm sure they're going to do this, is if you walk into a coffee shop, right, for example, and a cup of coffee is $5. Okay, if you use cash, it's going to cost you $6.
Oh, wow.
If you use credit or debit, it'll cost you $5. So what will most people do? Well, I suppose that anything is possible, but history shows, remember, I've got the broadest base of demand. So the way that I convert it is I simply sell it.
Right.
And then when they make payment to me, it's in that new currency. They're not giving me change for my gold. They're just converting it. I sell it, and that money goes into my account because I don't have a choice. I can't pick up a check, or if I picked up a check, I had to deposit it into the account anyway. But no, there would be no checks. Everything, full surveillance economy means they know what comes in, they know what goes out, they know where you spend it, they know how you spend it, they can dictate how long that currency is even viable, right? They can say, okay, you got to, and we saw this with the tests, right? You have to spend it. This is where you can spend it. And if you don't spend it by this date, it goes away. So you should be buying gold and holding gold for the same exact reason that central bankers are, so that you can stay in control.
Right.
Exactly like being your own central bank. Inflation causes nominal confusion. Nominal.